Summer gains continued last week. So the market continued on its upward trajectory. Not all stocks were up, but for the most part, the broad markets were up. Kind of a tech-driven rally as we've seen so many times throughout the year and in the last couple of years, really. But that continued last week. So there was a lot of news, Fed news, AI news with Apple. Big headline stories. So a lot going on last week, but overall a nice week for the market. So this is your Market in Minutes report, reporting back on last week, June 10th through the 14th. I'm Mike Minter with Financial Synergies. And let's jump into what drove some of those market gains here. And we'll take a look at what those gains actually were first. So 5-day performance. As we can see, the broad market up nicely. Dow did slip a little bit, but again, Dow being 30 stocks and not as relevant these days as the broader market. You can have one stock that really drags that down pretty easily. Small caps did drop off a bit, but overall, you can see the broad market did very well. Nasdaq, the clear kind of winner here, and it's pretty tech heavy. Well, very tech heavy. So that's indicative of what's going on in the S&P 500. Foreign developed stocks did drop off quite a bit, so wasn't fun to see that. But again, U.S. Stocks for the most part up very nicely. Year-to-date performance, we have the Dow Jones sitting at just over 3%, the S&P at almost 15%, incredible run. Russell's down just a hair has kind of been the story, kind of back and forth this year, up and down. Nasdaq, again, tech heavy, up over 18%. So by any measure, it's just been a phenomenal year for tech again. Foreign developed is still up fairly nicely for the year, but last week was a tough week. We are looking at rates now. So this has been another part of the story. These have continued to come down. So that's been a nice little bond rally as well. So not only have stocks done well, but bonds have kind of been lifted a bit by the declining rates that we've experienced over the last few weeks. So 30 years at 4.4, 10-year at 4.29, the 2-year at 4.75, and the 30-year mortgage, I should say, at 7.45. So it's nice to see this one coming down a bit. Obviously, it's going to take more than that to get the mortgage market moving again, but heading in the right direction. So S&P 500, the Nasdaq lead, which we just saw, and the Dow lagged a little bit. So market leadership took a familiar form. The tech-heavy Nasdaq led while the Dow trailed for the second week in 4 out of the past 6 weeks. That's been the case. Stocks trended higher at the start of the week as investors cheered an AI update, artificial intelligence from Apple. So that was kind of the big story last week. So by midweek, the market had split with the Nasdaq and S&P moving higher while the Dow lagged. Investors were upbeat after learning consumer prices rose less than expected in May and that the Fed decided to keep rates steady. So all good news. However, some investors were unsettled after learning the Fed officials had shifted their outlook and now only penciled in a single rate cut for the year between now and year end. A few months ago, the Fed had indicated as many as 3 cuts were possible. So obviously we've had to cool our jets a little bit and back off those expectations, but still 1 rate cut, hopefully, in the mix. Maybe more. We'll see. Things change. Busy week for news. So big week. A lot going on. Last week was chock full of market-moving events between Apple's AI update, inflation, and the Fed. It was a toss-up which influenced the market the most. AI's outsized role in driving market momentum continued last week. OpenAI's deal with Apple arrived at the start of last week. And the news followed OpenAI's deal earlier this year with Microsoft. So AI continues to be the big story and will probably be for the foreseeable future as this engine keeps rolling down the tracks here with just development after development. Everybody's scrambling to be part of this AI game. And whether you know it or not, you're in that game as well, because I don't care what device or software you're using, AI is being somehow implemented, or they're trying to figure out how to implement it into that. I mean, that's every thing from Outlook to Gmail to, Excel spreadsheets. I mean, you name it. It's all AI is being implemented in all of this stuff. So Wednesday morning, the CPI index was announced, Consumer Price Index. A few hours later, the Federal Open Market Committee updated its monetary policy. Those pieces of news have only arrived together 13 times since 2008. And the FOMC kept rates steady, as we just discussed, at 5.25 to 5.5 is kind of that target range. So this is widely anticipated. There was almost zero chance rates were going to be cut last week. So we knew that going in. So no surprises. The tame CPI report caused some volatility as investors grappled with how the report may have influenced Fed policy. But, that's neither here nor there. Bottom line is, what we expected in the beginning of the year is obviously not going to happen in terms of the number of rate cuts. We are probably going to get one. There may be two. There's still a lot of analysts calling for 2 cuts this year, so that's very possible. But that will depend on the news between now and the end of the year. So, but what's on deck this week? Got some key economic data. Monday, Empire State Manufacturing Index. Fed official Patrick Harker speaks. Tuesday, retail sales, industrial production. And we've got some more Fed officials speaking. Thursday, housing starts and permits, jobless claims. Fed official Thomas Barkin speaks. And then we got the petroleum report. And Friday, existing home sales. That'll be a big one Friday. Monday, we have, in terms of companies reporting earnings, not a huge week by any means. Monday, Lennar, Lazy Boy. Thursday, Accenture and Kroger. Friday, FactSet and CarMax. So CarMax is always interesting. See kind of what's going on in the auto industry is a big indicator. So anyway, that's pretty much it for the week, folks. Here is all of our contact information. As always, reach out to us for anything you might need, anything you want to discuss. We're always here for you. Hit that subscribe button down below. I'd love to have you subscribe to our YouTube channel and get all our videos as they come out. But we will report back next week on what occurs this week. Hopefully it's a good one. All right, guys, thanks so much for tuning in. We'll talk to you soon.